Well, hello and welcome back. In today's edition of the Forex Market Preview, I'm going to use my losses in the Euro USD to teach a lesson. We're also going to look at the battle of the patterns on dollar yen, and I'm going to show you how that played itself out. And could we be looking at the buying opportunity of the year in this one rare, obscure currency pair? All that and more on today's edition of the Forex Market Preview. Well, all right, welcome back, everybody. I'm glad you're here. Thanks so much for being patient with me as I've been out on vacation, enjoying some time with the family over the Thanksgiving holiday, but it's time to jump right back into the saddle. And I want to do that today, starting with the euro dollar. Now, as you guys will remember, if you've been following with us for very long, is that the market had become overextended. We had rallied back up, and I had talked to you guys about selling this level. Look at the previous structure support, the resistance level, and as the market rallied back up into that, I talked about, hey, taking that market short right there. Now, I actually shorted the market here. I don't just tell you guys this stuff and then I walk off and go do my own thing, or I just completely ignore and forget everything I talked about as soon as we talk about it. I really try hard to give you guys the actual trades that I'm going to be taking over the coming weeks and the things that I'm going to be looking at taking over the next couple of weeks, or over the next week. Now, as you'll see, this was about a 100 pip correction. We ran from, I shorted it a little bit lower than here because I shorted it right near the resistance level here, 35.25s. I think I shorted 35.14s, and we ran all the way down to 34.15s. So about a 100 pip move from where I shorted it, and depending on where you got short, you may have gotten even a little better deal than that. But if you'll remember what I said I was looking for trend continuation, which is what I expected this market based on how it had reacted to go lower, and for us to see a retest at least of these 33.50s and maybe even on down into the 31.20s. And I said I'm not going to clear. I'm looking for a significant move here in this particular pair. And we didn't get that. What happened is we moved in a full 100 pips, and then the market came back. And I actually talked to the private client group about this particular trade and about how I was still holding it and about how, I wasn't going to take my profits off because, all of those types of things. What I did do is I tightened up my stops a little bit. And I had my stops just above the previous swing high, and I actually ended up being, I had rolled my stops down to basically break even on this trade once we had got up about 100 pips. Now, what ended up happening was we came back and we stopped me out for a loss. For break even on that trade. I didn't make any money, didn't lose any money, but it was a little frustrating because then what happens is the market comes right back up, and it looks like we're going to hold that level again. And so I ended up taking another short position here only to watch the market reverse and take me out on protective stops up here around just short of the 618. Now, the point that I want to make here to you guys is that as you're creating your rules of engagement, I was looking for a massive return with a very limited amount of risk. And my purpose here in this particular trade was, okay, I know where the market should reverse. It should reverse right along this line. And if we go over that line by very much, then I have to question whether or not I've actually interpreted the market's movements correctly. And when we talk about stop placement, when I teach this in my courses, one of the things that you'll hear me say is stops need to be far enough away that they can't easily be triggered by stop hunters. So we don't want somebody who's just like running stops for 10 or 20 pips who's going to be able to grab your stops and then roll the other direction. And we've got rules if that happens. If for some reason you just got clipped, we've got re-entry rules that we teach for that as well. But they need to be far enough away that you're not going to get clipped by those type of stop hunters, but they're not so far away that you end up taking on an abject amount of risk when it's not necessary. So when we talk about where stops need to go, I always say, where do I know that I'm wrong? Where do I know that my analysis is off? And once that happens, I need to be out of the market. That's just my own personal rule. I don't want to be involved in the market if I no longer understand why I'm in the trade. And so if we use this as an example, as the market rallies up into this resistance level here and then it's defeated and the market rallies higher. I have my stops above the swing high, so they're not triggered on just like a quick 20 pip move. We got I got just over the 36 even handle. I was at 36.10, I believe, and at 36.10, my stops were triggered and I'm out of the trade. Now, why was that? Well, at this point, the market clearly has not held the resistance line that I was watching. And so now I have to question. Now I have to ask myself, have I really interpreted this market correctly? Is it really going to roll over? And in this case, it absolutely hasn't. So I had my stops in a decent place to protect me from an abject amount of loss, and I still had a chance to participate in that trade in the event that it had gone my way. And guys, trading is a lot of this, especially if you're going to be a technician, especially if you're going to be pinning your trading wins and losses off of technical analysis. So as we take a look at this type of trading opportunity, you really want to, it should always be about conserving capital. Conserving capital. When do I know I'm wrong? When do I need to take a step back and reevaluate? Because sometimes, guys, you can make all of the right decisions. You can do everything correctly. Your analysis can be spot on. And guess what? The thing still goes against you and you still lose money. And guys, as much as I'm not a not your fault kind of guy, that really isn't your fault. You've done everything correctly. Okay, and the market just didn't agree with you, and that's going to happen all the time. So you have to be in a position where you're not tied to a position, where you're not married to it, where it doesn't become like, oh, the market has to go down. It just has to because Jason said it was, or because I've done all this analysis and it all points that direction. Guys, don't be married to the position like that. But in this particular case, we actually have another interesting opportunity that's setting up here on the euro. So, hey, I took a little loss on this one. Now I'm looking for another opportunity. Now, until we violate these highs at 38.32s, I'm still thinking bearish. I'm still thinking bearish because the market has broken structure here to the left. So what I'm going to do is I'm going to pay very, very close attention to, or I just want to pay special attention to these highs because I'm still going to remain bearish biased here until we violate those highs. Now, we have put in, if I draw my Fibonacci level, swing high to swing low right here, what you're going to see is, and actually it's already been drawn here, swing high to swing low, I actually have, if I bring up my 50% retracement, you're going to see the market hit my 50% retracement. Now that keys me in that I'm probably looking at a bat pattern here. There's a potential bat pattern completion. I'm going to draw that in for you guys right now. And bat patterns, of course, are going to terminate at that 886. Okay? Boom, boom. All the way up there. So we've got this pattern formation that looks like it's going to complete, and we're going to have an opportunity to short 137.72s with stops above the swing highs. Now, if there are those of you out here who are watching the video who are not real familiar with advanced patterns, I do a ton of this stuff. They are awesome. They're extremely accurate. They're very easy to predict, and they have very clear rules for stop placements and target placements that makes it easy for, especially a new trader, to really define their trading plan and define their rules. Now, if you are not a student of these advanced patterns, I just released it to my own internal list last week, the Advanced Pattern Trading course. And all it is, guys, not to be too sales pitchy with you, but all it is it just teaches you all the patterns. It's a very down and dirty course. I built it so that it can be consumed really quickly and that you can be out here trading these patterns in a matter of hours. Literally, I think they're 20-minute lessons. And in a matter of 3 or 4 hours, you can learn all of the rules to all of the patterns that I trade, to all the stuff that we do in the syndicate. And I'm very excited about the program. So if you've been watching this video for years or months or whatever, and you just have never gotten involved with one of my courses because the prices were because of the price, because it is very expensive, this course is priced to be within the budget of every single person. And I'm going to have the link for you underneath the Facebook page here, in the comments section of the Facebook page. So take a look at that. And then I've actually got some more training that I'm going to be submitting out to YouTube, out to YouTube later on this week. So if you guys are at all interested in that, check it out. It's very, very cool. Now, so we've got this, and I'm going to look at shorting 37.72s. If it gets up here, I am going to short. I will be shorting this market at 37, just shy of 37.72s, probably 37.69s is where I'll be shorting this market in expectation that we will see a retracement. Now, Let's jump on over to the yen. That was the other one I wanted to talk about here. This is very interesting because if you guys look at this, we had two different patterns. If you guys remember, because I talked about this several weeks ago as we were watching this kind of form up, and I said we've got a very long, extension here of almost, this is what we would call the flagpole, and then we have a pendant formation. This is if bat patterns and crab patterns and cipher patterns are advanced patterns, these are just simple patterns, and this very simple pattern tends to break out to the upside. So when you see a pattern like this form up, what you're looking for is a potential break to the upside. And when it breaks out to the upside, we tend to see some follow through on that. Now, I also brought up an advanced pattern that was within the pendant. And this was another bat pattern completing at the 886. And the market pressed right up into that 886, right along previous structure. Let me just fatten this up a little bit so you can see it just a little bit better. Right up into resistance, right along previous structure. It paused for half a breath, and then it took off like a rocket. And you got stopped out on that bat pattern. So here's the thing. If you had played the pendant, you're a winner, you're very happy. If you had played the bat pattern, you're a loser, and maybe you're not so happy. But here again is the point that I want to make to you. Both decisions were correct. A lot of traders will take a look at a situation like this and they will say to themselves, well, what did I do wrong? Why did I not take I should have taken the pendant. Well, then they go and they find some analysis that proves that the pendant was the right decision to make. Well, it was the bigger pattern or it was over the longer time period. Guys, it doesn't matter. What I'm telling you is what we believe here at Trade Empowered is that you've got to have the trading plan. And if you have the trading plan and you've done the testing and you know, yes, bat patterns are 70% accurate. 7 out of every 10 times I'm going to trade one, I'm going to make something off of that trade. And I know that if I just take every single bat pattern on the portfolio that I trade, that over time I'm going to be able to produce a specific outcome. And that outcome is predictable. Once you've done that, it doesn't really matter. And the same goes if you're trading the pendant, okay? If you traded the pendant, you're looking at the pendants, you're like, man, 60, 65, 55, 60% of the time, these things break out to the upside, I'm going to hit my initial target. I'm going to make something on the trade. That's what we want to be focused on. We don't want to be going back and questioning why we took one over the other. We don't want to be bouncing back and forth, and because we looked at this, well, the next time this situation sets up, well, I'm sure not going to take the bat pattern, because that'll be the time that the bat pattern will pay off and the pendant pattern won't. And guys, consistency and discipline in your trading is by far and away the most important thing that you're going to do as a trader. It will, in terms of your return, in terms of your emotional well-being, in terms of your financial well-being, having that discipline, being dedicated and being consistent with what you're doing every single day is what's going to make you the kind of returns that you want to make. Now, on to the last trade. This is one that's coming up. So we looked at a potential trade on the euro dollar. We've looked at the battle of the patterns here on the yen. I'm going to go over to Aussie New Zealand. Now, this is not one that I look at it all the time, but it's not one that I bring to your attention very much, just because most people don't really trade it. It's an obscure pair, and unless you're following a lot of pairs like I do, this is not something that may be on your radar screen. But we're on the daily chart here, and I'm going to collapse this chart up, and I'm going to show you. Remember what we say, look left, structure leaves clues. We are out here in the middle of no man's land, back here at 109.71s. Look left, structure leaves clues. Look at what we're getting ready to run into. The first time we tested this level was in 2007. The second time we tested it was in 2008. Now it's 2013, almost 2014. And we're back down against that shelf. This has the potential to be a huge buying opportunity. The market is going into oversold condition as we run down into 1090, and there is a potential buying opportunity here. Now, what would I look for on this particular trade? Well, because my stops would have to be so far away based on structure, because I've got this pin bar down here, I'm probably not going to risk just a straight limit order buy here. I'm going to wait for some sort of evidence. The evidence like this is beautiful. I'm just going to scroll back here to the left. Market makes a long wick down, then sucks back up, and then the market kind of holds that level. That's really, really a nice move, and it's somewhat subjective. We can go into double tops and, or double bottom trading, but then I've got to explain double bottom trading, which is a friggin', 2-hour lesson on how you trade double tops and double bottoms. So I'm just going to tell you, as this market moves down into there, I'm going to be looking for either some sort of doji candle, some sort of double bottom, something to give me an indication not only that the market is going to respect the support, but also giving me a clear place to put my stops. Because like I said, I want a massive return for a very limited amount of risk, especially when I'm trading on higher time frames. So anyway, got the Euro USD trade. We got a potential Aussie New Zealand trade that may set up this week. And if you're part of the syndicate, you're going to be getting more trades throughout the week as we start to place the ones on the lower time frames, on the 5-minute, on the 15-minute, on the 60-minute. And you guys will be getting all of that on the Trade Floor software. So guys, that's all I got time for this week. Very, very glad that you're joining me. Don't forget to subscribe to the site. Subscribe to YouTube and go over and get on the Forex Market Preview email list so that you can get all those special updates. You could have already been part of the Advanced Pattern Trading course if you were signed up for the Forex Market Preview. So get a hold of that, and I'll talk to you guys all next week. Until then, good luck and good trading. I'll talk to you soon.